Welcome back to Market Day Report. I'm Scott Shelby, otherwise known as the Cow Guy. Thanks for being with us. Thanks for tuning in. We've got about 45 minutes left before we've got the USDA number. So again, like I've been saying, it's nice to know where we've been so we can get a feel for where we've gone once these numbers do come out. So let's kind of take a checkup of the market, see what the temperature is. Let's look at corn. Look at that corn table. It's off about 4 cents, 4.25 cents in that D's contract at 5.28 3/4. We've got March lower by 4.5 at 5.37 3/4. Soybeans are weak as well. Let's see just how weak. 12 3/4 cents lower in that November contract at 12.15 1/2. Jan off 13 cents at 12.26 3/4. So not too much strength going on in both of those contracts as we go into that number. Wheat in Chicago off 2 3/4 cents at 7.29 in that D's contract, while March is off 3 1/4 cents at 7.42 1/4. How about Kansas City? The hard red wheat in Kansas City. We got a little bit better board here. We're up a penny in December at 7.35 1/2, still about 3 cents off the highs. March is up 3/4 cent at 7.43 1/2. How about spring wheat in Minneapolis? So what's happening with that spring wheat contract in Minneapolis? It's up 1.5 cents in that D's contract at 7.47, while March is up a penny at 9.36. And then lastly, let's take a look at cotton. It's been all over the place. It's down 113 and D's at 108.66 last. So giving up some ground in the cotton. All right, that's going to be a good segue to bring in Brian Hoops from Midwest Marketing. Thanks for joining the show today, Brian. I haven't been able to talk to you. No, this is 2 days in a row, right? I think it is, right? So obviously we've got a WASDE today. What are your thoughts on that report? What are you hearing anecdotally? What are you thinking about your customers and which way are they leaning?
Yeah, good morning, Scott. So we have the report coming up. We've seen quite a bit of selling in corn and soybeans going into the morning hours, and now we're kind of stabilizing again. I think if you get a bearish reaction in here, you start pushing corn below 5.20 in the D's. You start pushing November soybeans near the $12 mark. There's some opportunities for our customers to try and get out of any hedges, lift some puts. And then look at, if you need reownership opportunities, look at using some weakness as a reownership tool. This is in the time frame where we should be putting in the harvest lows. And the old adage about marketing plans is if you get the combines out of the shed, it's the time to take your hedges off, because that's when the markets usually make its lows. And so a bearish reaction to the report today, I think would be a good opportunity for these producers that are holding some puts, holding some hedges, and need some reownership, all to step in and do some activity right after the report's released. So, maybe the USDA will throw us a surprise bone in here and not lower or not increase yields as we expect, and maybe even lower them. That would catch everybody off guard. I think, soybeans have dropped sharply since Friday's highs, kind of building in a bearish report, I feel. And so that certainly would catch a lot of people off guard.
Yeah, you're right. And the deal is that some folks out there need to realize that if we get a bearish number, it has to be bearish enough to bring in new sellers, right? And that's the key, because if it's bearish and it doesn't bring new selling in, we could rally, because we're already, like you said, we've already come off so far since last Friday's highs. All right, well, just do me a favor, stay right there. We're going to go away, pay some bills, and come back and talk livestock with Brian Hoops after these messages. Welcome back to Market Day Report. I'm Scott Shelby. Thanks for tuning in. I'm otherwise known as the Cow Guy. That's why I wear this getup, right? There is actually a reason behind it. Actually, my father used to wear this, so if anybody wants to make fun of that, they're making fun of my dad, and that's no bueno. All right, how about live cattle? Let's see what they're doing so we can have an idea about what the cattle market's doing before we see what happens in the grains in about 40 minutes. We've got December live cattle off 45 cents at 129.72, while February is off 27 cents at 134.60. All right, how about feeders? What's happening over there? We definitely have corn lower, so got a little bit of a rally here in November. Feeder cattle 20 cents higher at 161.92, while Jan's up 27 cents at 162.37. And we gain more as you go out those deferreds, just to give you a feeling about how that curve trades. Lastly, lean hogs rolling over here. We've got December off $1.75 at 78.42, while Feb's off $1.55 at $1.52 now at 81.55. Okay. There's a lot of numbers there. We're going to bring back in Brian Hoops to make sense of all those numbers for us. He's with Midwest Marketing. Brian, what are your thoughts on the livestock here? Or if you have any other axe to grind, the floor is yours.
Well, I appreciate that. The other thing I would mention in the wheat, we didn't talk about that earlier. Winter wheat plains going to get some much needed moisture this week. So there's going to be some selling,
Good
hedging
point.
opportunities for producers out there. Look at that new crop July, Kansas City, up around 750 a bushel. There's some pretty attractive levels, and I think we are going to plant a lot more wheat acres this fall because of prices and lower input costs. Now you look at the cattle market, and the show list numbers are down this week. That's supportive to the cash, but October futures already dialed in a big jump in the cash market for this week, and we probably need to take some of that premium back out of the prices. You can watch the feeder cattle market today, and I think get a pretty good handle on what's going to happen with corn. We are higher now with the corn being lower, but if we get some sort of a bullish report or bullish reaction to the report, feeder cattle, I think, do start to fall out of bed here.
Any feelings fleeting on lean hogs?
Well, those hog markets, we had a big run up just a week or so ago, reverse course and turn back lower. Now we're seeing a lot of technical selling coming into the market. Gap lower yesterday, another one, I believe, again this morning. And that's found a lot of technical selling after when you gap lower and just continue to free fall.
It'll be interesting to see, how we react to what we get here in the next 20, 25, or 30, 35 minutes. What are your feelings real quick in 10 seconds? How do you think the economy is doing and what they can do to demand?
Well, I think it's a stagnant type economy right now. I don't think we're growing. We're just more of a sideways type market, and we need that demand to go through to eat through our beef and our pork supplies.
Right.
We have to have stronger demand than what we've seen here recently. We're going to back up supplies.
I couldn't agree with you more. Thank you very much. Thank you very much. Brian Hoops from Midwest Marketing. Thank you for being on the show this morning. We'll see what happens in 35 minutes. We're all waiting with bated breath. I'll throw this one back over to Janet.